The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 3rd, terrific Thursday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I at just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So feel free to pick up that phone. Dial on in 877-927-6648. Internationally, 727-445-1044 on this terrific Thursday. Of course, this is the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading off 31 points. She's traded 16,868. S&P off 2 points, traded 1984. NASDAQ Composite down 16 at 4687. Russell 2000, that's up 3 points. She's trading at 1069. The DAX finished down 24 points. The FTSE down 16. Gold is up 15 bucks, traded 12.57. Silver's up 14 cents, traded at 15.17. Light sweet crude is flat, traded at 34.60. Leading the charge here, dollar-wise to the upside, individual stock-wise, you've got Toomey Holdings. They make great luggage, do they not? That's up 30%. That's up 6 bucks. You've got Chipotle up about 4 bucks, a little less than 1%. Editas Medicine up 11%. Stratasys, 3D software manufacturer, up 17%. To the downside, leading the charge, you've got Regeneron. That's down about 10 bucks, 2.5%. Google's off 7 bucks. Biogen's down 7. Public Storage is down about 5 bucks. Herbalife off 4. So let's begin. So a bunch of questions. My apology for not being able to be with you yesterday. Internet shutting down about, I don't remember, 9:30, 9:40, maybe it was 10 o'clock, something like that. A huge area. So I found out. How did I find out? Well, I actually needed the internet service and said, well, let me go try Starbucks. I wasn't going to do the show from Starbucks. Let me go try Panera Bread. Down. A huge swath. In any event, I couldn't be with you, but I am glad to be with you today. So we're going to cover some of the questions from some of the emails that were sent in, a bunch to cover there. Some emails posted at Den asking me to try to come up with any timing turn factors that might impact the stock indices. So I'll do that after the second break because I'll have to pull that information from another area, and I'll show you, what we can look at. But it's all about, with regard to what the markets are trying to do here right now, where we're at right now today, it's really all about the NASDAQ. And oftentimes I say that, not all the time, but it is really all about the NASDAQ with regard to us getting a clue as to what these markets here want to do. Now, what do I believe the markets want to do? All the signals that I'm looking at say the markets want to go higher. The confirmation for me, the Doblegee confirmation, that's going to come from the NQ, from the daily chart out here. So let's go ahead and put that set of charts up on my screen. The question is, where did I put that out here? Indices, daily, I don't want that. For futures indices, here we go. Now, this is a great little chart out here. You've got the daily contracts for the equity futures contract. Upper left-hand corner is the ES Mini. Upper right-hand corner is the NASDAQ. Lower left is the Dow. Lower right is the Russell 2000. If there's anything that we should be scared of at this stage. Now, prices really stalled here for the last couple of days, right? Yes, absolutely. We saw a late push yesterday afternoon. Now, it has stalled here for all kinds of the right reasons. Number one, if we were going to, let's take the Russell 2000, which is green today, which is up just slightly. If we take a look at the Russell 2000, we look at the futures contract out here. One of the things that certainly you would hear at TFNN, we would appropriately teach you, is be careful when you see something retrace back to the 0.618 retracement level, whether it's pulling back or whether it's moving higher. And when we're taking a look at those areas, we're looking at swing points. We're trying to find some significant levels where the market made turns. And inside the Russell 2000, the futures contract, there's no denying that from the trading day of December 29th, that in essence is when the market really topped. And that wasn't the all-time topper, but that's when we saw a change in trend inside the marketplace. And clearly, all the way down here on February 11th, that is when the market put in a low. So if we go from the high down to the low, you're going to see the 0.618 retracement level measures out at 1074, a bit of change. We use these as guidelines. We don't use these as being exact, although there are times, many times, where to the tick, to the pip, to the penny, you'll see it actually hit, and it's not mind-blowing anymore. It just does. It's because there's so many technicians, and so we are all familiar with those levels. So the key to being an extraordinary technician is not just to do the ordinary, it's to be able to evaluate what the market is doing. That's what you and I are going to do here during this next hour. So you've got the Russell 2000 back to the 0.618 retracement level. It needed to move higher in the futures contract, which is where it's trading inside the IWM, in order to accomplish that task. So that is something that says, hey, time to be careful. Just time to be careful. That's the Russell 2000. If we take a look, I'm going to save the NQ for last, I believe, out here. If we take a look at the Dow, and let me turn off a couple of things out here. That way it just cleans it up, makes it a little bit easier. So we're going to turn off our market profiles. We don't really need those out here. Retracement-wise, you can see that also from its high out here on December, I've used the December 30th, December 29th, December 30th, the same thing out here. We're just slightly above the 0.618 level. That's at 16,780. But we hit that inside the Dow on that trading session of 3 days ago with a wide-ranging bar. Markets do not end on wide-ranging bars. Now, what does Stevie mean? Well, we've had 2 days here of really sideways-ish movement. So you can see it didn't end certainly on a wide-ranging bar. We don't have any kind of reversal or anything like that. The candle right now today looks like a doji-style candle. Just says the market's tired. Where's it tired? At the 0.618 retracement level. Where is the Dow futures likely to get up to? 17,165, 17,263. Until we see anything else from the bears out here, that's where the Dow is headed to. I would venture to say it's actually headed all the way back up to its highs, at least to the 17,656 level. But we're going to take things one moment at a time. That's on the Dow. If we take a look at the ES Mini out here, the ES Mini, it's just gotten above its TAS weekly market profile high, which has been tagged 3 or 4 times this morning already, and is held as support. Something to think about. So what's the message here? The message here is unless we see a close below 1974, she's headed up to 2076, maybe even higher than that. I don't have the 0.618 retracement on this chart out here. I don't need it. Well, we probably do, but we don't need it. Right now, if in fact you're able to hold 1975, this thing is headed northerly, in a northerly direction. There is nothing out here that is bearish on really any of these charts out here. With regard to the NASDAQ, it's all about the NASDAQ. You're probably sick and tired of me saying it's all about the NASDAQ. The NASDAQ on the daily chart, trying to get above its weekly resistance level, 43.53. Look at that point of control. So much closer to resistance than support. This is some hard sledding that it's got to do. Sledding? Does that even make sense? It needs to clear 43.53.88. We see it close above that. Do not be short this market, unless you're an intraday trader. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, so, it's all about the NQ, in my opinion, at least being able to give us a signal, right? We've got the S&P, it says it wants to move higher. The Russell 2000, it's actually strong. It's leading the Russell 2000, is leading the Russell 1000. That's bullish, not bearish. You got the Dow futures above the 0.618 retracement level. They're saying that they want to move higher out here. So it's really just waiting. Everybody's just waiting for the NQ. Apparently, it's, they didn't get the invitation just yet. I'm giving it the invitation. I'm giving it the invitation here right now. Now, the market also is giving it the invitation. But let's go take a look at a couple of different factors here that we need to concern ourselves with. If we take a look at the NQ 30-minute futures contract, let's put that up on our screen right now. We're going to see a couple things. One, we know that when the most recent high was made out here, this is 1 o'clock in the morning. This is back on March the 2nd. So what's today? March the 3rd? Yeah, March the 3rd is, March the 3rd. So yesterday morning, relatively early, most of us were sleeping. We had one of those topping patterns that showed up, price relative strength divergent pattern. It didn't actually confirm out here until about 2:30 in the morning. It confirmed. What did price do? Price went ahead and moved lower. When it moved lower, what did it do? Hey, the exact same pattern that it made up at the high, guess what it did at the low? It made the exact same pattern. This was at 2:30 yesterday afternoon. Was it any coincidence that price went ahead and moved higher into yesterday's close? Let alone as was making that pattern, you've got a nice set of market profiles that show up. Where's that point of control? Closer to the support level. The exact opposite of what we're looking at on the daily futures contract out here. That says strong support. Well, what did the other one say? The daily chart, that said strong resistance. That's what we're dealing with right now. Now, what we can see here is we did see a nice little bounce and then market move lower. It's possible that there's an A to B, a Gartley buy pattern that is setting up here. If that's in fact the case and the markets move lower, that says the Gartley buy pattern sets up around 42.86. We didn't get down to that level. The lowest low so far coming in the 12 noon time frame, between 11:30 and 12 noon. Well, I would like to give you that price. Let me try one more time. There we go. That was at 42.93. That's not too bad from 42.86. So we can say that, hey, guess what? An A to B equals CD, a Gartley buy pattern here completed. The 30-minute profile that is shown up here right now, it's somewhat neutral. The point of control slightly closer, just slightly closer to the resistance zone out here. So, the cavalry certainly showed up at just a half an hour before we were coming on the show here at between 12:30 and 1. Nice little bullish engulfing candle had formed there. The anticipation is, in this case here, if the market's going to turn lower, this is probably the extent of where the NQ is going to trade to, 43.12 or so. That doesn't mean that it can't hit 43.23. If it does hit 43.23 or gets above it, then we can say that the market is ready to move higher. But still on the daily basis, we want to be paying attention to that market profile high weekly of 43.54. That is really the number. Now, we're going to go to one of our callers, and then I'll go ahead and come back, and we'll fill in some of the other pieces inside of the NDX 100 by taking a look at volume. So this is going to answer a question that came in with regard to volume patterns in the Qs. And then we'll take a look at one of the other questions in the den, other timing factors that we can, so we're going to bleed it all together. But first, let's go out to Nashua and speak with Lou. Lou, thanks for calling. Thanks for holding. How are you this afternoon?
Good, Steve. Thank you.
Go ahead. Tell me what you're looking at, because I don't think I have the right ticker symbol.
Okay, DUST.
The dust. Okay.
But it's shorting the miners.
Okay, excellent. Now, are you in this trade? You're looking to get in this trade? Tell me what you're doing.
No, I was looking to get in at a lower price.
Okay, so I would say if you're looking to get in a lower price, you don't have the signal, in my opinion, here just yet for getting in on this trade. Do you typically try to get in early, or do you prefer maybe a more conservative approach and you're looking for confirmation? Give me a feel for your trading style.
I like to get in early.
You like to get in early. So now you're going to make it more difficult on me. So early, so when I take a look at the dust, the very bottom indicator here, not the very bottom, the center indicator, it's got a reading of minus 2.9. That's its price oscillator reading. Now I'm it's a minus 2.9. So if we take 609, I'm going to have to do this. If I try to do this in my head, I could give you the wrong number. So I'm going to take the 19-day exponential moving average, 6.09. And I'm going, I need to do that, equals 6.09. And I'm going to subtract from it 290. And this is going to be for this specific vehicle. That gives me a price point of 319. If, in fact, we were to see the dust close above 319, it's at 389 right now, that would be your early entrance signal into this trade.
I see.
Okay, because what you're looking for, this oscillator reading is below zero. It's still falling. You want to at least see that oscillator reading turn up. Now, this is obviously the direction shares bearish view of the miners out here. And the way that these oscillator readings work, you can see if you're watching this here, I'm going to expand this up for folks so that we're not looking at the price. So this little center panel here happens to be our price oscillator. And we can see that back here, this is the dust. This is showing when it began to fall out here. You got a signal right here on January 25th when this started moving lower. And you can see that that is when this price oscillator started moving lower as well. And so that gave you an early signal to go ahead and take this position if you were going to actually short this vehicle, which you wouldn't have. But I'm just using it in reverse for you. So now I'm looking for the exact opposite. I'm really looking for that price oscillator to continue to rise out here. And what you need today, and this would be a very early entry into this, is you want to see this close above, what was the number, 319 out there, Lou. That would be the earliest signal that I could give to you. And then just simply, use stops. Make sure that you're using stops on this trade out here.
Okay, sounds good, Steve.
Alrighty. That was Lou in Nashua. That was taking a look at the triple ETF for shorting the gold miners out there. And many people may say he's got to be crazy. And I would say he's not crazy. He may be early, but not crazy. Now, I am anticipating that gold and silver are going to trap people like rats. I don't know with regard to the mining equities how they're going to behave, but the metal itself, it's up $15 today. If we just simply take a look at the metal out here, which had a great move, you've got to admit it's had great moves. And look, I've been on the long side of this trade several times just in the last 4 months out here, but I'm not in that position right now. Now, you've got the gold really trying to hit that weekly TAS profile resistance zone. It also happens to be its high, which is at 1263.90. And take a look at since that exhaustion day, and that's what it was. Stevie believes it was an exhaustion move here on February 11th. And you take a look at, you got to ask yourself, well, why isn't this moving higher? Why isn't this moving higher? Somebody is unloading and selling into this marketplace and is loving it. And who is doing that is the big money traders in gold. What I am loving more than anything is you cannot not turn on a financial channel with everybody telling you to buy gold and buy miners out there. Where the Sam heck were they back in January when my clients and I were actually buying it? Because then they were saying, don't touch it with a 50-foot pole out here. I could absolutely be wrong, but I believe a bunch of people are going to get smoked. It won't be me. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 27. S&P is down a couple of points. And, look, I have no idea where it's going to come from, why it's going to come, what's going to cause gold to have this miraculous pullback that's going to trap a lot of people. No more. I have no idea where it's going to come from, no more than I did when we were buying gold and anticipating it and saying this set of parameters, and then we're ready to pull the trigger. No more than I did when we bought the bottom of gold out there. If I listened to the boob tube in order to be able to get my make my trading decision, why would I spend all this time as a pattern recognition person, master expert out here, if I really was going to, I listened to them, actually, what's going on, some just for entertainment. It used to be to avoid listening and watching politics, but my God, you can't get away from that at all. But really, to use it as the counter trend, don't buy gold, don't buy gold, don't buy gold. I'm like, yes, yes, yes. And what is it that you guys are looking at versus what I'm looking at? It's the same set of tools out there. So that's why I have so much conviction. Now, if you are an aficionado of volume out here, well, then you're not really happy about it depends. It depends on which side of the trade you're looking at here. But we had that little exhaustion day. That was on February 11th out there, 49 million shares. That was the first time up. The next time up out here was on February 25th with 18 million shares. And today, light volume, 9 million shares. That is certainly not the way that you take out highs. Now, that swing point hasn't been tested out here, and I could be dead wrong, but I just don't think so. It's just using the same set of tools out here. What is it that's going to cause this thing to fall out of bed so quickly? I do not know. Could be the markets just simply taking off and moving to the upside. Because if to the extent that some of this was fear-based and China-based and things of that sort, then I can say, well, if we go back and you take a look at the if you go back and you take a look at, where is it, the futures market that we were looking at, I think I got to label these things better. If the ES is going to run to 2076, the Dow to probably 17,656 out there, that'll the Russell 2000 back to 1112, 1160. That's not out of the equation. 1160 is probably the likely target for the Russell 2000. Maybe that's what it is that topples it over. I just don't know. But there are really great patterns out here. Now, back to, are there any patterns? Well, I remember exact question out here. Were there any turn factors, pattern factors to tie into the question that came in with regard to, hey, Steve, the QQQ volume, the email basically said you're talking about the Qs at the markets being generated with high volume bottoms. So there's a listener that truly does listen. And there's no question that is how the Qs give us a great signal with regard to a bottom. The question was, today is extremely light volume. Does that mean we have a top in place? That is a great question. Now, the Qs have done, not we, but the Qs have done 13 million shares. 13 million shares says, Simon says that you're going to do, or Stevie says that you're going to do around 22 million shares today. A light volume day is likely on tap for the QQQ. Let me just know, I got to adjust this. I was in there playing around, so let's adjust this out here. Let me actually turn that off. It's good to just kind of clean up the chart just a tad. Let's get rid of our TAS boxes. We really don't need those. Let's get rid of the price oscillator reading out here. Let's get rid of the price oscillator. There we go, that moving average. So what we can see here that you've got in the Qs, yeah, light volume, no question. 13 million shares out here. Well, take a look at the bottom. That was formed, by the way, on February 8th. What kind of volume? 91 million shares, right? People would be saying, my God, you're moving lower with volume. That should mean you're going to continue moving lower with volume. Wrong. That's not how the Qs form bottoms. I mean, look at, for goodness sakes, August 24th, right? Huge volume day out there. Who knows what the real low was in the Qs? We just know 150 million shares. Have the Qs even gotten back to that low yet? The answer, absolutely, positively, no. Now, you're absolutely right. The Qs can make tops with light volume out here. If you take a look at December 2nd, the volume was 22 million shares. What is it that I'm suggesting we're going to do today? Just straight line math, about 22 million shares. The difference, though, maybe back in that December date, and the real key actually came in right here. Here's what the Qs typically do. It's not a one-day occurrence of light volume. It's just not. It's not that it can't be, but it's typically not. Instead, what I like to look at, like is on this chart here, is I like to look at a 10-day moving average. That's what this line is on the chart. This is a 10-day moving average. And so I'm estimating that with the 22 million shares or so today, that the 10-day moving average is going to be around 30 million shares. It really needs to get down to this lower threshold out here, which is around, on average, around the 25 million share deal, a 10-day average, just as it did up at the top here December 4th, just as it did at a small-term, short-term high back in May, back in the end of April, back here in March, back here in the November timeframe. There are two other time periods where the volume indicator did not get down there. In both of those instances, guess what? It gave us an even better signal. Island tops. That was out here between July 19th and July 21st, as well as the island top out here between December 29th and December 31st out there. So, like the Qs haven't even come near a short-term trend line out here. So my interpretation of all this is we need several more days, many more days, 5, 6 more days. I don't have the exact number of really light volume before that even comes into play. Hey, let's go out to Brent in California. Brent, thanks for calling. Thanks for holding. How are you doing this afternoon or this morning?
I'm doing very well, Steve. I was just having a little pre-lunch snack while I was listening to you and your analysis. So thanks for taking the call. How's everything with you?
Everything is doing well. So I had a little fish for lunch. What did you have?
I was just having my wife buys them. They're kind of like a mix of fruit and some other things in a bar form.
Oh, okay.
It's just a good snack. It's something fairly healthy, and it fills me up. So
that's good. That's good. I like that. So you want to take a look at ConocoPhillips out there. And
can I tell you quickly what I've done, just so you know my position, and then we can go forward with that. Does that sound okay?
Absolutely. Please go right ahead.
Yeah, so what I did, I bought in, it would have been, I think it was 3 days ago, I got in at $34 a share. And I haven't been doing a lot of these lately just because there's been, some of the moves have just been insane here lately without even having options, but I did buy 10 contracts of the August 35s.
Okay.
So that's my position.
And so would you the way that you would typically trade those, would you start taking some profits? Would you and hold the rest through expiration? What would you typically tell me what your thinking is, or what your thinking was when you got into the trade? Obviously to make money, I know that.
Yes, I bought enough time, and the reason I chose this one in particular is ExxonMobil, DVX. They had already kind of made some moves. But when I looked at ConocoPhillips, it was still near its bottom. So I thought it had more potential to have a bigger gain. And
yeah.
Doing that, and I think that I can see the 40s, low 40s potentially. That's kind of what I'm looking for as a target. That's what I have my eye on.
Absolutely. Okay. So go back to that breakfast bar out there, and I'm going to grab a sip of water, and I'm going to go take a look at ConocoPhillips on multiple time frames, and then we'll come back to it, try to figure out where it's headed to. We'll be back with Brent in California. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We've got the Dow is off about 13 points. We're going back out to Brent in California. We're analyzing ConocoPhillips. Ticker symbol out there is COP. So one of the first things that I'm going to put up on my screen out here, Brent, is I'm just taking a look at the monthly chart. And on the monthly chart, the nice thing that we had here is in the case of ConocoPhillips, it was moving lower and doing it with less relative strength out there. Now, while it was doing that, we actually have 2 different reversal signals out here. The very first was a hammer candle that occurred the week of January 22nd. And that was our first little reversal signal. Now, it looks like the low of that hammer candle has been tested and has been rejected. Looks like it was tested 1, 2, 3, 4 times. So for the past month, it has been testing the low of that hammer candle, which was 32.71. And each time it, on the weekly basis, it was able to go ahead and hold that level. Now, even though it doesn't show up on my screen out here, this last big thrust to the downside on February 5th, that little bear sash candle, we had 3 weekly candles that basically were sideways moves at or near the bottom of that. And this week right here, where we're seeing a nice move to the upside, assuming that it ends up like this, you're going to have what's typically referred to as a morning star, a 3-river morning star. It can form over more than 3 candles out here, which is what this one did. This one actually formed over the course of 5 candles out here. Now, interestingly enough, this is on the weekly chart that we're looking at, and that's a very bullish signal that you have out there. Plus, it's trading above market profiles, both daily and weekly out here. So this says, just from that standpoint alone, this should be a really good trade for you. That is what the weekly is showing. If I take a look at the daily chart, now the daily wasn't moving lower with less relative weakness. That doesn't validate the pattern or anything. Just that's what it was, was doing or wasn't doing out here. But you've got a really nice signal from the weekly chart. And since you've taken these call positions that take you out into August, you're looking at more intermediate term time frame anyways. So, that really seems to be boding well for this trade out here. The other factor that I would put in here, and then we'll take a look at a couple other things, or maybe there's some things that you've been observing on this chart, is when I take a look at light sweet crude. So I imagine, and maybe you've looked into it, but I imagine that ConocoPhillips, ExxonMobil, that they move directionally, that they're somewhat correlated to what happens with light sweet crude. Do you know how correlated it might be?
Oh, there's no question that there's definitely a correlation when oil's going up, and not necessarily point for point, but it certainly is beneficial. If you have that trend going in your favor, it's gonna help push them up for sure.
Yeah, so if that's the case, then you and I have got to be surfing around here saying, hey, what kind of case can we make that oil's made a bottom out here? And in order to really make this trade really work out really well, or to try to get some momentum on our side. And when I put the monthly chart for light sweet crude up here, it's got two of my favorite patterns, which is that from the highs out here, this is a continuous contract. It's the only real way for me to be able to do this. But from the highs out here in May, back in 2011, all the way down to last month, assuming that last month's low does not get taken out, price was moving lower, doing a less relative weakness, and you get to a seventh wave. I know you are a Chapman wave aficionado. So you got a, singing in the key of G, you've got a G wave, what I like to say, the seventh wave out there. You've got something that says this could be the bottom. It doesn't say how much higher light sweet crude is going to go, but at least for your trade, as long as it doesn't take out the lows, it should keep you in pretty good shape on the trade. So I see longer term, which is really how you're taking a look at this trade, from a monthly standpoint, from a weekly standpoint, where it says makes a lot of sense to me. You've now cleared these invisible levels of horizontal support and resistance out here. If we take a look at our TAS market profiles, if I put monthly levels up on my screen out here, the monthly level says $58. I know you're talking about 40, and so you may be out of it well before that. Just typical swing point analysis says that your target on this, and certainly you want to be able to clear on a daily basis that last big volume push on February 4th to the downside. But once you can clear $39 and you're not that far away from it, your eyes have to automatically go back to the prior swing point area, which says $57 out here. So to me, it looks like a great trade. If you're asking me, try to find something that's wrong with the trade, I would be really hard-pressed to do that. Really hard-pressed to do that. I would say the other thing to be looking at would be light sweet crude. In the case of light sweet crude, is trading at $34.85 right now. Light sweet crude, as far as I can see, is in a consolidation range. And that consolidation range is from about the lows of 28 to the highs of $35. If 35 70 or so gets taken out, this says that light sweet crude moves up to $42. It doesn't give us the time, when it can do that, but it says that would likely be the outcome. And right now, the key level is going to be getting above 36.28. Any close above 36.28, and you're going to have, you're going to be drafting a pretty fast automobile out there. So that's my take, and I can't find anything really negative about it other than, it's possible light sweet crude gets up to 36.28, rejects it, and then trades between 36 and $30 out there. But, that may not totally hurt your trade.
It's kind of interesting when you did ask about that correlation. I was watching when oil was not doing too much this morning.
Mm-hmm.
It was actually maybe even a little weak. This stock was still going up. Regardless of that happening. So that's encouraging to see that as well.
Yeah, like I say, I'd be really hard-pressed to find anything wrong or any reason or any, I can't control the market no more than you can. You had a little bit of a sign of strength yesterday, so that's nice considering you had moved into the equity yesterday. But, it's just got to, you're just looking for this thing to clear this $39 area so that you're somewhat really out of the woods here. But it looks like a great trade.
And then in general, Steve, I didn't get a chance to listen to the whole program, but you're kind of still thinking that we are biased to the upside for at least the short term and kind of intermediate term. Is that your thinking?
My thinking now has changed. Last night, as I looked, today was a real key day for me, today and tomorrow. If the markets do not reverse course today or tomorrow, it doesn't look like you're going to today, tomorrow I don't know, then I cannot make the case that the move that we've had here, because market breadth has been so strong that we've seen some kind of blow off top. I do believe we have seen that in gold, but I do not believe we've seen that in the market. If we do not get those significant turns to the downside today or tomorrow, then I believe that the market moves higher into May. That doesn't mean we don't have some retracements, but that says buy the dips, is definitely in full force here. People have not given credit to the strong market breadth inside this move off of these lows here, just over the course of the last 12 days. It's been, I'll use the word huge. It's been huge out there, and that says to me, I will say this, Brent, go back and take a look at every major index and go take a look at the long-term trend lines from March of 2009 and go see how many we're trading below. All that's really happened out here is we saw topping patterns and price went back to support across the board. It's mind-blowing. Hey, overseas, it's a whole different issue, but we're trading the U.S. markets for the most part. So that's my take as we speak right now.
Well, thank you very much, Steve. I always appreciate your analysis, and just have a wonderful day, and I'll talk to you soon, okay?
That sounds great. That was Brent in California. Dow is flat. S&P is up a point. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 13. S&P is basically flat out here. And, what you heard there in Brent's last question with regard to my take on the market overall, I really believe that our role, yours and mine, our role is to harness as many great technical trading tools that provide us with good probabilities, excellent probabilities. We take a look at those every day during this hour out here. So over time, you've got more and more comfortable that when these patterns show up on here, you're like, okay, I understand why he's taking the position that he is out there. And it's really, my role is to interpret the market. That means that each second, each minute, each hour, each day, each month, each week, there's more information. The market's role is to provide us with information. Our role is to step back, take a look at that information and say, has something changed? Is there something in the pattern that we now need to consider, as opposed to getting married to our opinions out here? Check your opinion at the door. Have an opinion. Have conviction behind that opinion. I do not show up doing this show without conviction. I just simply don't. Doesn't mean I'm always right, but it doesn't do you or me any good to not have any conviction out here. To tie things together, because one of the questions I was posting in the den before we started the show was, hey, pattern-wise, is there anything that you can take a look at, where you're seeing some kind of turn, some kind of timing out there? And, if we take a look at 3 or 4 of those, we would be looking at this chart, for example, right here. This chart shows the 84-year average of what the Dow Jones typically does. Now, these are all based on candle closes, and it's a line chart. It's the easiest way to be able to show us. Now, the brown line here is the current year of 2016 through yesterday's close, and the blue line happens to be the 84-year average out here. Originally, I was going to just simply chuck this and say, yeah, we're not going to be doing that, but the reality is we're really following very closely along these lines out here. What do I mean? Well, if we take a look at that 84-year average, you've heard this before, there's really 2 or 3 times a year when you should be putting your money into the market. Unlike Warren Buffett that believes you can't time it, I say BS. It's all before Steve. There are better times to put your market to work and worse times. For example, most people wait till April 15th to put their retirement funds, into the market, make that contribution, right? Absolute worst time to be doing that, because you're so close to when the market typically forms some type of shorter-term top, the May to June to July timeframe. Why would you be in it? Sometimes it's right around May 1st. Why would you wait to April 15th to put that money in there? That is just simply insane and crazy. There's nothing that even suggests that you should do that. On the other hand, if you don't need to get your taxes together to make that contribution, you should be making it always around the end of January, early February. Well, when did, if you're a long-term trader, let's just say you take the Warren Buffett approach, you are never going to go short, you're just always going to make contributions. Well, I would tell you that first time to be putting money together, take all those Christmas gifts and put them in the market at the end of January. Don't put them in right after Christmas. The market usually moves down that first week, that first 3 weeks out here. And when did the market really form a bottom out here inside the Dow? It was January 20th. Came back and tested it in essence on February 11th, end of January, early February. That's when you should put your money to work. We also know the October time frame, right? In the fall time frame. When did the market make its bottom here? Well, it was in August of last year, right? Came back and sort of tested that area at the end of September. That's right around that fall time frame. The best times to be sticking your money together. So what I cannot ignore is this chart here says that we could easily be moving higher to the end of May. That's what that chart says, just the average out there. If I take a look at the correlation between the election year cycle, this takes us back into the 2007-2008 time frame. I know I've run out of time out here. I'm so sorry, but stay tuned for David White. He'll follow up on this. You could go test drive my newsletter service. It has these charts in there. You do that by going to the homepage at TFNN.com and /Steve. That'll take you to the sign-up page. I'll see you guys tomorrow. Thanks for being here. Have a great Thursday, and I'll see you on fabulous Friday. Take care, folks.
Larry Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.